If you're a trader and you want to get results like this, or like this, or like this one, then this video is for you. Make sure to stay till the end because together we're going to go through some very valuable information that's going to help you level up your trading. Let's go. Okay guys, thank you for tuning in. Welcome, and I'm going to show you exactly how to day trade and how to take a winning trade step by step. Okay, so first thing we do is identify market structure. Okay, so you look into your charts and straight away you're going to see that market is either bullish, ranging, or bearish. Okay, obviously if it's bullish, it's going to be printing higher highs and higher lows. Okay, that's an ideal scenario in which you're going to be looking to take buying positions. Okay, now what if price is ranging? Personally, I don't like trading in choppy and ranging conditions unless the range is large enough for you to trade the support and the resistance levels. Okay, that's actually pretty easy to do, but there's a big difference between a ranging market and a choppy and slow day. Okay, that's very, very important. And obviously bearish, you will see that price is going from left to right, going up, down from your chart. Okay, it's going to be printing lower lows, lower highs. Okay, that's where you're going to be focusing into taking sell positions. Okay, now there's another way to see the market structure, and that is, I don't know if you heard about rally base rally or rally base drop or drop base drop. Okay, that's a very, very easy way to see and identify the market structure. There is nothing more in the market. Okay, so for example, this is a rally market. As you can see, price is going up. That's a rally base. That's whenever price is going to make a little retracement where it's going to consolidate before continuing pushing up. I also call this an FTR. Okay, and you can trade whenever you have price continuing or breaking above this base. Okay, then you have rally, base, another one, and rally. Okay, that's simple as it gets. There's nothing more to it. Price and market, it's the only thing that it's going to do. It's going to either go up or range or drop. And this is an example of a base, drop, base, and drop. Okay, market is not going to do nothing more. Okay, as you can see, price will only just go from left to right, and your job as a trader is to identify what's going on. Okay, so for example, this is a base. As you can see, price is consolidating. As you can see, the candlesticks are colliding next to each other, so price is really going nowhere. So whenever you see this, that's a base. Okay, and what do? You just wait for a breakout. Okay, now price is dropping. Once again, we have a base and then a drop. Okay, we're gonna see some examples and how you can actually trade all of these. Okay, so here we are in gold. These concepts, this is just pure and plain price action that you can apply to whatever instrument you are trading of your preference in whatever session you're trading. Obviously, I do recommend you to create a trading plan. And if you need assistance with, you can check the link below and I can help you create one. Okay, guys. So for example, this is gold. Whatever you trade, that's absolutely fine. So we're just going to read the market. Okay. So let's say you get into your charts and you start reading the markets. Okay. So we're going to do that together. We're going to read the price together. Okay. So this is drop. This is a base, drop, another base, drop, another base, drop, another base, and a drop. Okay, now what do we have? Base, rally, drop, base, and all of these would be kind of like a huge base. Okay, because price is going nowhere, it's kind of like consolidating. Then we have a little rally. This is like in an Asian session, you know, that volume is a little slower at that time. Then you have a base, a rally, a base, and a rally. It's just about reading and knowing what's going on in the market and identifying the structure. Okay, so it's basically the same as identifying higher highs, lower highs. Price is bullish, it's trending up, so you just want to focus into looking to get buying position. Okay, guys, so let's just continue doing a little bit more. Okay, so here we have a big base, kind of like a drop. Okay, as you can see, this is the end of the day. The lines represent the end of the days. Okay, so you know, in the end of the day, obviously volume starts to slow down, and then we have a rally, base, and rally. You see, guys, there's nothing more than that. That's as simple as it gets. So now that you know how to read the market structure and you identify the trend that's happening, and now you're ready to identify the potential entries. Okay, next thing you do is identify the important zones. Okay, now don't complicate things, just you can use simple support and resistance levels. Just make sure to identify the most important ones closest to the session that you are actually trading. Okay, there's no need to go back in time like a lot, just as long as you can see the most important highs, lows, liquidity levels. And whenever price is approaching, for example, here you see that we had this rejection right here, okay, with a pretty nice pin bar. Now we had another rejection right here, okay, as you can see. So now this was a resistance level. Okay, as you can see, we had this one and this one. But now what happened when this bullish engulfing candle breaks and closes above? Okay, now you don't take a buy straight away, because there was a potential possibility of price actually reversing and making a fake up. Okay, that's a fake up. Okay, but in this case, price continued going up. But now what do you do? Now that you have this previous resistance being broken, now you're going to focus in that area to look for some potential buys. Okay, guys, so that's where you're going to be focusing into taking a buying position. And as you can see, it did work out pretty damn good. Okay, now I'm not going to go like very into detail about how execute and enter. I go into that in my online academy. I offer personalized private mentorship. You can check the link below. This is another example that you had this support being created. Now, how do you know whenever you have a support? Well, whenever you have more than one rejection of a level, or you have a bullish candle, then a bearish candle and a bullish candle, that's going to be a support or a resistance. Okay, guys, so for example, as you can see, price was being rejecting this zone, but now price broke and closed below. Okay, that's why it's very important for you to wait for a candle closing below, because what happened if you entered a sell right here, you're gonna get stopped whenever price was making this long wick. Okay, guys, so always wait for candlesticks to close below and above levels. Okay, so as you can see, price made kind of like an inverted head and shoulders. Okay, this is the same thing as a QM. Okay, now this structure, it means that price is shifting from bearish to bullish. Okay, remember what we said? We had drop, base, drop, then we had sort of like a base, and now we're having a rally. Okay, so now that price broke above, guess what do? You focus on this level, which was a support. Now it got broken, okay, and it will become a new support. And as you can see, that's where you take your buying positions. And as you can see, price just went up. Okay, that was a pretty successful trade. It's very simple, guys. It's just a matter of having patience and being very methodical and understanding the candlesticks and what's going on in the market with the levels that you have. Okay, because each level, they have a meaning and a reason behind it. Okay, so it's very important for you to understand what's going on in those levels and identify what's happening with the candlesticks, because the candlesticks are going to tell you everything. You don't need order flow, you don't need anything else complicated. Okay, like honestly, if you learn how to read the candlesticks and the levels, you are set to go. There's nothing more to it. Okay, guys, so let's continue. Same thing in this example. We have a resistance level, and as I told you guys, there is no reason for you to do anything fancy, anything complicated. You don't even need indicators as long as you know how to use them. I do have other videos that I talk about them. As long as you use them just like a tool, okay? Like, don't rely on them. There's no reason for you to depend on any indicators, okay? This is like a language, and if you know how to read it, man, you're set to go, okay? So for example, how to draw resistance, okay? So as you can see, we had this very nice bullish candle closing at this level. Now, what happened next? You had this bearish candle closing at the same level, rejecting this area, and now it starts to drop. So this becomes a new level, okay, guys? Now, what are you gonna do when price reaches this level? You're gonna be waiting for clues, okay? So for example, here we had a bullish candle closing above, but you don't want to enter right away, okay? You don't want to enter a buy right away because there's a possibility, as I told you before, that price can make a fake up, okay? Because this is an area of liquidity. So now look at what happened here. Price rejected that area of resistance, okay? And it printed out a huge bearish engulfing candle breaking these lows, okay? So now price is dropping. That was your resistance, okay? Simple as that. So for your entry, you can zoom into lower time frames and see if you get some more clues at this area, okay? The way I would approach this based on this chart, probably I would take just a sell position right here, okay, and target this first low, okay? That would be my TP1, and maybe just obviously my stop loss. I would need some more information, otherwise it would be a very large stop loss if you placed it above the highs, okay? That was a more safe spot, but it was pretty large, okay? So obviously with momentum, as you can see, price was starting to break below and immediately reach this low, okay? That was the most obvious level for you to take profit, but as you can see, price just continued dropping, okay? All right, guys, so this is gold. This is the 1 hour chart. As you can see, I just want to show you very, very simple. What do you see? Okay, just tell me in your mind, what do you see? Price is going up, right? And we had this previous level being broken, okay? So now let's draw it. Very, very simple level right here, okay, guys? So we had this rally, drop, base, rally. Now you want to see some evidence or information at this area, so you just need to wait for price to come back at that level, okay? So let's see what happens. Okay, now I had a pretty big bearish candle. Let me zoom in so that you can see what's gonna happen. Let me delete. Now you don't want to take sales right away, okay, guys, because as you can see, we had this bearish candle, which is kind of like a FTR, okay? So it will also act kind of like a little support level, okay? So as I said before, this is the area that you want to wait and get some information, okay, guys? So I'm gonna forward so that you can see what happens. Okay, that's it. Price started to go up. So as you can see, guys, it was a very, very simple and textbook type of structure in which you have a previous structure being broken and you just wait for price to give you some clues at the retest of that zone, okay? So this was the 1 hour chart. So obviously in the lower time frames, you're gonna get more information on how to take the trade. So let's go and zoom in into this area in the lower time frames to see what was going on. Okay, so this is a 15-minute chart. I think an ideal time frame for you to take easy and simple and stress-free entries in gold would be 15-minute and 30-minute chart, okay? That's how I like to approach gold. It's up to you. That's okay. So now we are in our zone, and as you can see, this candle is rejecting this level. Remember that I drew with this line the red bearish candlestick that was acting as an FTR, or as they call it, order block. It's the same thing, okay, guys? So This candle has a long tailed wick, which is rejecting this area. Okay, now let's forward and see what happens. Now you have a pretty nice bullish engulfing candle, and if it was me, I would take a long position at the close, okay, and my stop would be placed at the low of the candlestick, or this one, okay, for a tighter risk reward ratio trade. And obviously I would draw this resistance level, okay, and this would be my first and easy target. Now let's see what happens. Okay, so now you see price is automatically starting to go in our favor. If you now you can start trailing your stop loss, okay, to keep your risk very tight, okay. And the next candle just went straight into our TP and actually continue going up. Now let me forward and see. Okay, now it's again same thing. Now it's retesting this previous resistance. Okay, we have a rally, base, and rally. Okay, so you can maybe take another position right here, and we can just go for a 1 to 1.5 for the matter of this video. Okay guys, now why am I taking another buy position? Because we had this previous resistance now being created a support. Okay, so as you can see guys, we had this candlestick right here that it was rejecting. It's rejecting this level, and then the next candlestick is closing above this body of this candle. Okay, so that's the reason that I'm taking a buy position. Now let's see if it works out or not. Let's see. Okay, another bullish candle, that's good, and another bullish candle, and as you can see, it did go straight into TP, and the next candle just continued going. Okay guys, so there is endless of opportunities that you can take every single day in the market. Okay, there's something very important that I want to show you. You can check the link below if you want to get my exact same trading systems that made me a lot of money. If you're struggling to get consistency, this is for you guys. Okay, this is my website. You can join, you can subscribe. I have a private online academy that includes my assistance. You have contact with me whenever you want. I can check your charts. I can help you psychologically with my strategies, my systems. As you can see, I do have a lot of material in here. I have more than 60 videos, and I do have more than one trading strategy. Okay, they're extremely reliable, and I do have a compound sheet, PDFs, and many lots and lots of strategies that I have created personally, and they have been tested over the years. I have been trading for more than 15 years. I did trade it inside a hedge fund, so I do have a lot of experience. Okay guys, so this is for you. In case you're a struggling trader, make sure to check it out. Okay, there's some discount, 15% discount, so just check it out. Okay, so it's very important for you to be a successful trader to create a trading plan that revolves around your personality. That's why I emphasize that in my online academy, I have more than one system, okay? Because we are all different and we see the market in a different way. We have different personalities and we are programmed in a very different way, okay guys? So as long as you create a trading plan, which I can help you with that, and as long as you follow your own rules, then there's no need for you to lose a trade. Okay guys, now also I include in the members area, there's a lot of rules, okay, that if you follow them exactly as I say, there's no reason for you to lose a trade. Okay, so what should you include in your trading plan? There's me personally, in my experience, in my own experience, and what I have seen in other traders is that successful trading in the long term includes just trading one pair. Now, why is that? Because you will become an expert in trading that one pair, okay? Because I don't know if you know, but every asset, they behave very differently because they will react to certain fundamentals, news, and worldwide events, okay, such as gold, which is very, very susceptible to global economic news because, as you know, whenever there's a conflict, it's a safe haven for investors. Now, indices such as Nasdaq, S&P 500, and US 30, obviously, they are affected by the largest companies in the United States. Okay, so whatever information that affects the United States is going to affect these indices. Okay, so also if you trade Forex like GBP USD, Euro USD JPY, there's every single pair, they will behave differently. Okay, they move differently, they have a set of pips that they will move daily. So all of that I include in the members area. I will help you to design a trading plan based on your lifestyle and your personality. Okay, also it's very important for you to include in your trading plan sticking to a specific time. Now, I don't know if you have a job, okay, if you work or if you study or if you take care of your family or whatever you do, but just make sure that you use and you focus for 2 hours, at least 2 hours. I need you to be focused for 2 hours because the human brain is not gonna be focused for more than 2 hours. Okay, just remember when you were at school and you had to do those long ass exams, okay, that they took a lot of time. Now remember what happened, your brain starts to shift. Okay, so it's exactly the same in trading. As long as you focus for 1 or 2 hours a day, you will do a better job. Okay, if you focus for a short period of time, whatever you choose, London, New York session, or Asian. Obviously Asian, it has a lower volume than New York and London. Okay, and this is very, very important. Okay, you as a trader, your reticular activating system, okay, it's gonna become more and more educated as you practice more and more your trading system. Okay, as I said before, in my online academy, I do have more than one system. Now, I do recommend you sticking to one, choosing just one, whether it's price action, fair value gap, smart money, breakout, retest, supply and demand, support and resistance, whatever, etc. Okay, it's very important that you have your playbook and you stick to, I would say, one, maximum like three setups, and that's it. And just become a master of that and just see it happening over and over again in the market. Okay, obviously the risk management is very important, but the mindset and the psychology is even more important. Okay guys, so if you're not focused, if you don't have the right psychology, if you are not in charge of your emotions, it's going to be very, very hard for you to succeed in the long term. Okay, so that should be included also in your trading plan. Also, an important tip is to avoid the very, very high impact news such as CPI, FOMC, and NFP. Okay, because the market is going to be very, very, very choppy, and it's going to be very hard and difficult to trade before and after the news. Okay, and obviously the news is not recommended because you can blow your account in a matter of seconds. Okay, so this is what I was talking about. As you can see, this is previously before the news, this is the news itself, and this is after the news. So it was very, very choppy before and after. So me personally, I just skip these high impact news days because the market, obviously all of the investors, the hedge funds, banks, everybody is waiting for the actual news, what's going to happen in the market. But I don't recommend you trading the news itself because it's extremely, extremely dangerous, and you can just blow your account in a matter of seconds if you're on the wrong side of the trade. Okay, remember, there's going to be always a new day, there's going to be a next day, there's going to be new setups. Just wait for cleaner market conditions. Okay, just respect your trading plan, and I promise you, you're going to see significant and substantial changes in your win rate. Okay, it's going to increase in your balance, in everything, even in your mood. You're going to be better, you're going to be happier. Okay, thank you very much for watching this video. I hope you enjoy it and you learned a lot. See you in the next one.